There's red-hot inflation here in the UK economy and seemingly no let-up. Let's take a look at the numbers as they broke this morning just to check to see what happened where we had consumer prices coming in 8.7%. This is the headline number. Consensus have been 8.4%. That 7.1% reading on core consumer prices is the highest reading since March 1992. Producer prices up, retail prices also on the way up. Now, the Bank of England is widely expected to raise rates on Thursday as a result. The big question is it going to be 25 or 50 basis points? What's going on? Well, there are three reasons why we're in this position. First is the government's response to COVID, injecting cash into the economy by trying to avert a crisis of confidence and help ease the pain of the supply chain shocks. Then came the Russian invasion of Ukraine, driving up food and fuel prices and spiking metal prices and wrecking supply chains further. Finally, the UK economy has been performing better than expected. It's not seemingly, at the moment at least, entering a recession and is creating jobs at a record pace, which is pushing up wages. Add all this together with the continuing flow into the economy from government subsidies during COVID for furlough, etc., and subsequent to that, helping out certain aspects of the economy. It's created this inflationary bubble that has yet to be lanced. Let's take a look at our first chart here, which is what's happening with sterling against the US dollar. Why is sterling on the way down? Well, US rates have still some way to go up, according to Jerome Powell today at Congress, and the 2% inflation target in the States is a long way off. So it's certainly in the mix that there is going to be an attractive reason to buy the dollar because US rates are going to continue to rise according to this latest statement. So we got sterling down. I suspect part of this is also to do with the fact that we've got an almost certain recession coming later on down the pipe here in the UK. Now, it's very close to this line of support at 126.79, which is the height that we saw back on the 10th of May, which is when sterling recovered to that high point there, which at that point created a resistance level, which is now support. Let me just take a quick look at what's happening as well with sterling against the euro. Same sort of direction of travel. I don't think inflation is over in the Eurozone either. And this all contributes to this idea that the ECB has also got interest rates to go in terms of the upside. The big decision, though, tomorrow is going to be what's happened with the Bank of England and whether or not we get 25 or 50 basis points. That could give a steer to these markets. Let's take a quick look at what's happening with the FTSE. It's down for a fourth day in a row. Significantly, I think, possibly maybe as well, it's now down below this 200-day moving average. Again, we've got a turnover in the MACD. I suspect we've got a big, if we don't get a 25 basis point rise tomorrow from the Bank of England, I think we could well get a statement which just goes to underscore the fact that they are hawkish and they're going to be raising interest rates again and again and again in the seasons to come, and possibly over the next year. According to some economists, we could well have another 150 basis points added to the base lending rate at 4.5%, and that is what could steer the economy down into recession, which is why I think some people are pricing in certain concerns about sterling as we look out from this point. But it's all to play at high noon on Thursday with that Bank of England meeting.